Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, January 25th, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Market state, we're in an uptrend. You can see the trend gauge over here. We've got the coveted 4 green arrows, meaning market leadership, acting great. And all 5 of the major indexes are trending above their respective moving averages for the 3 time frames that we track. Short term being the 21-day moving average, medium term being the 50-day moving average, long term being the 200-day moving average. So what happened today? Strong close offsets big down move on Tesla after a negative reaction to its earnings report. Kind of salvaged the day. We started with a gap up, completely ignoring that Tesla news. Gapped up 0.4% on the S&P, 0.5% on the Nasdaq 100, and 1.4% on small caps. As usual, small caps faded. That's exactly what they've done each of the last 3 days. But the market kind of was making lower highs and lower lows all through the day, kind of giving it up a bit until the last 45 minutes or so. Strong action into the close gave us green across the board. Here are the final numbers, and we've got a change on the Big-7. We're going to punt Tesla from the Big-7 and put Netflix back in. You remember the FANG Plus index, the FANG Plus going all the way back, the FANG Plus index. N was the what represented Netflix in the FANG index when it was first one of the hot tech stocks making its big move. It's still in the FANG Plus index, as is Tesla. But when we calculate our Big-7 now, we're not going to have a loser dragging down the result. You can see the disparity today, the Big-7, if you include Tesla, which was down over 12% on the day, the Big-7 down 1.14%. That's not really what happened. If you swap out Tesla for Netflix, which had a great second-day reaction after its earnings report, it's up 1.03%. So change that we're making going forward starting tomorrow. I won't be showing both of them, but I won't be including Tesla. So the RG8, our 8 growth ETF composite up 0.43%, S&P 500 up 0.5%, equal weighted, nice day, up 1.01%, NASDAQ 100 just barely squeaked into positive ground near the close, up 0.12, equal weighted, better at 0.37. Dow up 0.6, same with mid caps. Russell 2000 small caps up 0.7. Global 60/40 evenly split between stocks and bonds, up 0.42%. In-house GROTECTION up 0.43%. Let's get into some charts in the tail of the tape, and we'll start as we usually do with the S&P 500. You can see after a negative reversal yesterday, I mentioned this was the second candle setup for an evening star pattern. The single candle, a shooting star, meaning a big negative reversal off the top, but inside day instead today. So this is bull market action, putting up a fight. You can see here's the high and the lows of yesterday and today's highs and lows contained within that. There's the big fade in the afternoon, and we were looking like having another big fade, but we got down near the lows of yesterday, held, and a strong rally into the close. Bullish action. 6 straight up days and 4 straight all-time, 5 straight all-time high closes. NASDAQ 100, which was dragged down by Tesla, closed just barely positive, made a lower low, but all in all, it's pretty much a win for the index, considering that Tesla was down 12%. Dow Jones Industrial Average back above the 38,000 level. Mid caps closing mid-range, but fading again from the open, still above the 21-day. And this is really a pretty decent 4-day tight consolidation that it's undergoing here, fighting off some stronger yields as of late, but not necessarily today. And that was the reason why we gapped up this morning, was some economic news. We'll get to that when we get to the tail of the tape, and that brought yields down. Here's IWM, another 4-day consolidation, holding the 21, closing mid-range. You can see the third straight day, gap up, fade, gap up, fade, gap up, fade, but this time some strength into the close, kind of similar to what we saw 2 days ago, unlike closing near the lows, which is what we saw on Wednesday. Let's look at equal weight. You know that equal weighted S&P 500 is actually negative on the year. This looks a lot like the mid cap 4 straight days of consolidation, an inside day hanging just above the 21-day moving average. Let's go to the VIX. While the market was rallying in the morning and gapping up, the VIX was positive. That's kind of a bit of a red flag, something we definitely pay attention to and talked about all day. And then we started to fade. You can see the VIX back above the 21 and 50-day moving averages. The 21 and 50 are pretty much flat. When indexes are flat, they kind of act like a ping pong net or a volleyball net or a tennis net. They don't provide a lot of support or resistance either way. It's the slope that usually uh, increases the power of the resistance or support. But VIX up on the day with the market up, not a common combination, but something to take note of. The dollar being weak yesterday, strong today, faded a little bit into the close, coinciding with strength in the broad market. Uh, Gold and gold stocks, bit of a bounce today. Gold, kind of consolidating, not looking bad, but the gold stocks just look awful. Uh, Inside day, tight range action today. Bitcoin still trying to figure out what it wants to do after the Bitcoin ETF debacle, big sell-off after that. That was a very clear sell the news. Second straight tight close and an inside day there. Let's go to bonds. Bond prices were up today, meaning yields came down. We get to the tail of the tape. We'll discuss that in a second. Here's the broad bond index. Here's the long bond, the TLT. Inside day tight range. Here's the 30-year yield down 0.75 and the 10-year yield down 1.10. That's our inter-asset correlation. Let's go to the tail of the tape. We'll go down to the news here. Q4 GDP, the first read came out. We're expecting 2%. We got 3.3%. Well, the economy's strong. Normally, you would expect that to have a negative impact, but also with the data included the Q4 core PCE. This is a key inflation number that the Fed looks at, and the core number was 2% annual. And if you've got a strong economy but you're not seeing inflation, that's kind of Goldilocks-esque. And the result was the futures popped on that. So that was the impetus for the up open. 6 days up on the day count, 6th straight day above the 8 EMA, 14th above the 21-day moving average on the S&P 500. As far as sectors goes, oil's the main winner on the day. Dollar strong on the downside. Uranium, banks, XLV, healthcare, XLY strictly because Tesla is such a big weight in there. Defense stocks down, semiconductors started strong, faded. What we do in the portfolio, Uber showed superior relative strength today. We added to that, now our largest position, and hedged with SQQQ. When we started to fade and broke below yesterday's low. We'd been eyeing the fact that the NASDAQ 100 is 6 to 7% above its 50-day moving average, which is extended. The continued sell-off from the open and weakness, we're just kind of churning here. Made sense to put a little bit of a hedge on. Ended up we're underwater slightly on the hedge now because we did have the strong close, but still makes sense to have it in place when we're as extended as we are. We'll take a look at some key charts in the portfolio, plus 3 other earnings reactions. Let's get into that right now. But the bottom line on the day, strong finish offsets negative Tesla impact as the NASDAQ 100 and the S&P 500 close at all-time highs. I wonder if you can hear my dogs barking in the background. One of the poor little female puppy just got spayed and has a cone on, and she's not too happy about it. Okay, let's look at some charts. First of all, the Tesla debacle today. I saw a Tesla bull describe it as a model for how you do not want to run a conference call. Maybe this is the kitchen sink quarter, but there was really nothing positive about it at all. We gapped down and we kind of trickled lower all day, a little bit of strength into the close, but heavy volume. 70% above average, down 12%. And this is on top of the fact that it already had fallen from 265 to 210-ish over the last 4 or 5 weeks, and a lot of thought was, even if it's so-so, it's going to bounce because it already had sold off to that degree, unlike its other brethren in the big cap 10 that we've been referring to. So there's Tesla, complete on the complete other end of the spectrum. Netflix with its big gap up inside the upper body of the candle for yesterday. Double average volume again. Great stuff here out of Netflix. Up another 3% today. And after hours, this is hitting chip stocks. Intel down 8%. Intel simply does not have an AI game. The earnings, reported good, but the guidance not so good. Down 8.5%. There's also KLAC, not a big AI chip maker, a semiconductor equipment company maker, though, down 6% after earnings. So those two are going to hit the SOX tomorrow. Here's the SOX ETF, and that's down 1.4% after hours. Couple highlights from the portfolio. Datadog may have stopped going down at the 50-day/10-week moving average as it closed near the top of the range. The leader today in the portfolio was Uber, as we added to it, making new highs. That's really all that stood out. AMD just continues to be extremely strong, reversed off of the big gap up. However, earnings next week, much anticipated earnings next week for AMD, Nvidia. Inside day today, Lilly showing a little bit of relative weakness, but still holding above the 21-day moving average. Snow just kind of biding its time while the market goes sideways here, but closing at a high versus the last 3 days. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION because it's not how much you make in the market, it's how much of that you can keep. We focus on growing assets when the market is in an uptrend and protecting assets when the market is in an unhealthy state. And if you like that approach, we'd love to hear from you. And with that, I'll wrap it up for Thursday, January 25th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.